Hey, so I'm joined here with Daniel Priestley. We're in London. Daniel is about to go on stage and talk at the Harbour Club, so very kindly agreed to join us. Before you do that, so I've known Dan for
10, 12 years?
About, long time. This could be a very long interview, but I'm very conscious of your time and also making sure we're on stage right. There's a lot of stuff I want to cover with you. I don't want to spend too much time with your background, so if you are interested in Daniel, and I would encourage you to Google him, but just for pretext, can you give us a quick sort of 2-minute background on you?
Yeah, background as an entrepreneur, built a company in Australia, moved to the UK, built an entrepreneur accelerator. We now have about 3,000 clients in Australia, UK, Singapore, USA and Canada. And we work with fast growth companies that are going through that entrepreneurial growth journey, getting funding, standing out in a noisy marketplace, scaling up and making an impact in the world. You know, we look at a lot of companies that have a goal to do something beyond just making money, but to in some way improve the world.
Okay, perfect. Great snapshot. And I guess the reason I'm so keen to talk to you and to get your ideas to share for investors is not so much just the 3,000 businesses that work with you, but you speak to many, many more. Across around the world, you've spoken to tens of thousands probably.
Yeah, having written the entrepreneur books, I speak at a lot of conferences all over the world. So I'm speaking to, and in order for us to get a client, we actually only take on about 4% of people that we talk to into the accelerator. So it's a very low rate of people who get through from filling in an application online to actually being accepted on an accelerator.
Okay, so what our viewers want to know is, as the topic of the book, is how do you as an investor profit from this small business world? And one of the things I'm particularly interested to hear from you is you cut across like a whole range of businesses. You're dealing with companies that are sort of very high tech, and you own some yourself, all the way through to very traditional,
just boring, normal.
Which the companies I love. So I guess what are some of the trends that you're seeing in investing that people should be looking at or looking forward?
Yeah, so trends in investing. In the 2010s, right up to the 2020s, the rates of people investing in small companies was dropping and dropping and dropping because the rates of return in property and big companies, the FTSE 100 and the Dow and the NASDAQ, was so good. And it was kind of like, you know, a lot of great little companies would go out to investors and say, can you invest in my small tech company? And people would say, well, why wouldn't I just invest in Google and Facebook and Netflix? And
they're still growing like a small cap.
Exactly.
Yeah.
So what's changed is that because of the marketplace in 2020 and the returns have gone off a cliff and the valuations have dropped and all that sort of stuff, actually what's funny is what you see in the top end of business is the mirror image in the bottom end of business. So investors say, okay, well, you know what, I'm not getting any returns if I go in, or it feels very risky to go into the big companies. So I want to have a look at what's coming up, and I want to have a look at what companies are going to benefit from the 5G revolution, what companies are going to benefit from a changing economy, what companies are going to benefit from an aging population going into retirement. So they're looking at the new trend companies and the new innovative entrepreneurs a lot harder than they would have just a few years ago or even a few months ago.
Okay. And you've actually you do your own investing, and you've acquired a number of companies, which is kind of the ultimate form of investing. Yep. What are some of the decisions, and I guess what are some of the mistakes either you've made or you've seen other people make when they go into the small business space?
So the biggest mistake is thinking that all entrepreneurs are performance entrepreneurs. And actually, 75 to 90% of all entrepreneurs actually just want lifestyle. They want freedom, they want fun, flexibility. And what that translates into is that when they hit about 12 people on the team, they don't want to really go much beyond that. Believe it or not, I know that sounds so crazy, but you might get someone who's super ambitious, but then they go up to about 12, 13, 14, 15 people. And the type of person who often starts with a blank sheet of paper doesn't like rules, doesn't like structure, and they wanted to do this fun creative thing, and now it's turned into a bunch of board meetings and strategy meetings and following through on what they said they would do and all that sort of stuff. So the vast majority of entrepreneurs are actually not investable, but there are a couple of opportunities in that. Number one, when you learn how to spot the entrepreneurs who are investable, then actually you realize they're not in as much competition as you'd think. Most people are going to drop out of the race very early on, much earlier, more early on than you'd think. And the second thing is that there's a lot of great companies that get to a few million in revenue, and then the entrepreneur's disengaged. And actually, that's just about the time where you could take it over and give it a real run. The real value creation in companies happens at about the 2 to 20 million mark. So the first 2 million, at that point, if you were to leave the business with 2 million of revenue, you'd barely be able to sell it. You'd barely be able to do anything with it. There's no valuation has actually been created. There's no asset value right up until 2 million. And then from 2 to 20 million is where the business professionalizes. It starts to scale. It starts to think about, what it's doing well, what it's not doing so well. It gets rid of some stuff. It doubles down on some stuff. And then it goes up to that 20 million in revenue. And that's where it does have a valuation, and it does have, some prospects. Ironically, there's just as much effort in going from 0 to 2 million as there is to go from 2 to 20.
Yeah. So let's talk about that growth thing, because it's one of my personal bugbears with specifically like the venture capital space, where investors like venture capitals come into companies, and because of their model relying on this massive outperformance of one or two companies, they put huge pressure on companies to expand faster than would be considered sensible.
Yep.
And I speak to business owners that have so much pressure on them from investors to make decisions that actually don't make sense. And we've seen recently kind of the WeWork debacle, but a lot of that was basically one of their biggest investors said, "You're not thinking big enough. Like, go crazy."
Yeah.
And they went crazy,
and they did what they were told.
So my challenge with that is that actually you have a lot of really good businesses that could be here in 20, 30, 40 years time delivering value, and actually what happens is they overexpand and fall over because there's so much pressure. Now I know you've been doing a lot of work, and it's interesting because in at the end of my book I talk about building companies for longevity. And how do you build a pan-generational business? And I know that you've been doing a lot of work recently on doubling companies, but it's more about sustainable growth rather than exponential growth.
I've been researching companies that double and double and double and double. Companies like Lego and Fender guitars and even bands. I've been looking at bands like one of the case studies, Dolly Parton, who ended up building a $700 million net worth through country music, obviously McDonald's, Nike, and all of those kind of enduring brands that have been doubling and doubling and doubling and staying relevant for a very long period of time. So there's some key principles around what creates a company that doubles and doubles and doubles. But one of the interesting ideas that I stumbled upon is that many great companies get going at about year 20. So, for example, Apple was started in 1978. It was almost bust in 1998, had a reinvention moment in 1998, and then became the biggest company in the world 10 years later. You see this, there's a lot of them. There's obviously Apple and Microsoft. But around year 20, you see a lot of companies hit this weird wall where they're kind of like lost and they're not sure what the hell to do. And then they reinvent and away they go, much bigger than you would have thought.
That's really interesting, because if you look at the average age of the companies that we acquire, it's 20 years.
Yeah.
And what happens is the minute they get into this new environment, this publicly listed company environment, suddenly they can access much bigger contracts, much bigger budget.
Start thinking like a bigger business.
Yeah, that's very interesting.
Yeah, so that was fascinating. So there are a number of principles around this, but what's interesting is that a lot of the needs and wants that people have out there in the marketplace haven't changed. People want and need the same things. They might change the way they get those things, but if a company's got a good culture, it can innovate. it's actually in the running to deliver upon those needs and to leverage its case studies and leverage its history more than it thinks. I think a really fascinating idea is that things are never as good as they seem, things are never as bad as they seem.
Yeah.
So a company that might have gone stale has probably got a lot of innovation in it, but no one's recognizing it. And a company that everyone thinks is super amazing and innovative probably is sitting behind the scenes going, well, what the hell are we going to do next?
Yeah. All right, cool. So I want to just wrap up with two areas. One is impact and ESG, and then the other is kind of the growth. And specifically, we'll come back to impact because I know that's an area that you're passionate about, but just the growth. So most of the companies you're looking at are private.
Mm-hmm.
A lot of the investors that we have are starting to dabble in angel investing, because the barriers to entry to become an angel investor have dropped off a cliff. And it's a
and there's great tax breaks in many countries.
Correct. And it's a potentially good way to dip your toe, although I see an awful lot of mistakes, and a lot of the videos that I've done already when I was at the World Business Angel Investment Forum are kind of looking at some of those strategies. What are, I guess, if somebody's thinking about investing and they're, obviously they're hoping to back the next Uber or something, what are some of the...
So here's what I look for. Like if you imagine a stack, right? And we're looking for a stack of things to all stack up. So the basic one is a value proposition. The fundamental value proposition's got to be solid. And that means that they've got a good solid concept. They know who they serve, an audience. They've got a solid product or offer, and they've got a good way of selling it. They can get to market and they can sell that thing. And initially they might have even competed on price and they might have been the cheaper alternative, but that is essentially the first base that a business has to hit is its value proposition. The next thing that I'm looking for, which is something that we work with on companies, you need to have a founder who is able to mobilize resources around them. An influential founder is a big deal. So if you think about someone like an Elon Musk or a Richard Branson or a Mark Zuckerberg, these are people who know how to enroll people in a vision. They know how to get things done. They know how to magnetize investors and magnetize suppliers, and they kind of build almost a cult loyalty around them. Mm-hmm. And even though we see this phenomenon, or a lot of people see this phenomenon, but I still think that angel investors don't go looking hard enough for it. That just because a company's got a great value proposition proven, if you've got a dull little technical person who isn't able to inspire their team around them, it runs out real fast. That you can have a team of 10 people and that's about as big as you can get. They have to be able to mobilize resources. And then the final thing is that the accelerated valuation really comes down to three things, which is a proprietary asset set. So some sort of proprietary asset in the business, something that's hard to do for any other company, hard to replicate, or some leading asset where they're ahead of the market. And it could be a combination of culture, brand, could be products or intellectual property. So some sort of a proprietary asset. The next thing is that they have a great team. So you're looking for an operational team, a dynamic team, a team that's got chemistry, that's working, that's performing. And the final one's recurring revenue or at least predictable revenue, so that you can actually forecast out and say, this is how they're going to be making, this is pretty much how they're going to be making their revenue a year from now.
Yep.
And this is how much, roughly speaking, they're going to make. Now, when you get those three things, the recurring revenue, the operational team, and the proprietary asset, if those three things click into gear, then the business goes.
So when you're talking about the value proposition, do you include in that proven market, like the ability to sell it? Because what I see, a lot of people get so excited about the idea or even the team, and they just neglect the fact that the market actually isn't responding, isn't buying the product.
Yeah,
so,
exactly.
So is that included in the value, or does that come later?
Yeah, it's kind of like the value proposition is really, does this genuinely solve some sort of a massive need in the marketplace?
Can you sell it?
It's, you see a lot of companies where they're all about the icing on the cake, but there's no cake. And the value proposition is ultimately what is the deep intrinsic need for this business to exist? What problem does it ultimately solve? And are there lots of people who have that problem? And you can hype something up and you can say it'll make money one day, but if there's ultimately not a underlying value proposition,
short-lived. Okay, let's wrap up with impact. And this to me is really this last 12 months. I think there's been a significant shift. I mean, we've been talking social entrepreneurship for over
years,
a decade. But it seems to me that in the last 12 months, the rest of the world seems to be getting on board with it. And specifically, two things that have really stood out for me. One, BlackRock saying that they will move all of their $7 trillion of assets into ESG funds. And the American Chamber of Commerce, which has got the top 300 companies in the US, saying we no longer believe that a company exists purely for the benefit of shareholders. We think there's other stakeholders, there's the environment, there's staff, there's community. Those two things to me, it feels like that's a bit of a tipping point. It feels like I don't have investor conversations anymore without some reference to ESG coming up. What are you seeing on the ground, and what are you seeing in terms of what's effective? And look, without question, it's still pretty early days, and I think there's a lot of confusion and greenwashing, and it's still pretty murky. But what are you seeing that's kind of real and tangible?
Well, let's kind of focus on it like this. The average age of someone who builds a sort of very financially successful company is about 42. The prime of a CEO and an entrepreneur is not 22-year-olds who can code. It's actually 42-year-olds up to 58. There's this window from 42 to 58, which statistically is the most relevant period of a CEO or an entrepreneur's life where they create enough value. So you've now got people who are millennials coming into that age, and this is a group of people who really that's how they think. They think about, I want to impact the world. I want to do something that's got some meaning behind it. They understand money can come and go, but ultimately your impact is what lasts. And they understand brand and reputation is a driver of money. And they're trying to inspire a team of people as well who are millennials and that sort of stuff. So companies that don't have any impact, they might have the most intelligent way of raping and pillaging resources, but they're not going to attract talent. There's not going to...
That talent piece is the thing I feel that most investors have missed. So for a long time, if you look at that typical kind of investor Wall Street concept, it was, look, I don't think that company should be doing this sort of stuff, because what should happen is the money should come out to the shareholders and I decide which charities which philanthropy I want to do. What that neglected and what I was seeing on the ground is there is no way to attract talented staff to your business unless you're serving something bigger.
People want to update their Facebook profile with, I work at this really great company and here's who they are, and look at the amazing stuff that we're doing and the problems that we're solving. So if from purely selfish point of view, you want to work with a company that has a social purpose, because they're going to attract the best people. They're also going to attract the customers. All things being equal, if a company is essentially seen to be a good company, a good citizen, doing good work, they're going to get disproportionately high attraction. And if a company is seen to be the opposite, if it's seen in any way to be uncaring, dismissive, out of touch, it's going to get negatively affected. And then there's the other side of things too, which is that with millions and millions of businesses all over the world, you kind of from a very human perspective, you want companies to be doing good things. There's a huge opportunity in having 1 million companies out there doing wonderful things in the world, and the flow and impact of what that would mean for the world. And I always think about it just in the idea that, charities, they tend to be good at band-aid solutions and coming up with a quick fix for something that's wrong, like an A&E scenario. But the fundamentals of an economy and a planet and a world is driven by business. If there's going to be a plastic in the ocean, it's because businesses made decisions about, we don't care about putting plastic in the ocean. And if it comes out, it's probably because businesses say, actually, we're no longer willing to have that.
Yeah, it's fascinating. And I hope the conversation is changing. One of the, in the book, and I think we've discussed this as well, is how polarizing Elon Musk is as a figure. And most entrepreneurs look up to him as someone that's solving great problems. most investors can't stand the guy
Yeah.
because he overpromises and doesn't
Yeah.
deliver on stuff, or doesn't deliver everything.
Yeah.
But the piece I've always struggled with around the really hardcore investor fans of the gasoline space that are so anti the electric car market. I just think, walk through any town with your kids and you've got like fumes, but why wouldn't you want electric
to invest?
Yeah.
Well, fundamentally, investing, if you go back to the very core of it, you're investing into the future. Investing is about the future.
Yeah.
And you know, the future is shaped by the investments we make today. And if you go back to just the very original intention of investing, it was about actually shaping communities and shaping the world around you, and saying, you know, these are the types of houses that we want to have, and these are the types of buildings that we want to have, and this is the infrastructure that we want to have, and these are the types of business practices that we want to have. And you know, when you're thinking about future, well, future returns is a good part of that. It's obviously important to think about future returns, but it's also, you know, what kind of future do we want? And obviously with 10 billion people on the planet, you don't want a lot of people spewing out diesel fumes. You know?
Yeah. Cool. Well, look, I'm conscious that you're probably supposed to be on stage at any minute now, so
They can't start without me.
This is true. So we'll wrap this up. One of the things that I haven't jumped on you yet, but off camera, I'm going to try and persuade you to give away one of your books to investor. There we go. So if you sign up for lifetime access to the videos, you'll get at least one of Dan's books. And I strongly recommend checking out anything that Dan and his team do. He's got YouTube channels, LinkedIn, Facebook, tons of great content there, and loads to learn from, especially if you're really interested in scale-up businesses. Dan's book, 24 Assets, is absolutely phenomenal. I think it's a game changer out there. And so hope you enjoyed this interview. Hope it gave you some ideas, and look forward to seeing you on the next one.